Check Podcasts.
Hi, I'm Bruce Williams. I'm the CEO of the Greater Victoria Chamber of Commerce. This is Chamber Chats, coming to you, as always, from the podcasting studios here at the Czech Media Group, who is one of our chamber champions. We're going to meet another champion in just a second. I'd like to acknowledge, as always, that I live and work in the land of the Lekwungen-speaking nations, the Songhees and Kusapsan. And all of this is made possible by the support of Island Savings, a division of First West Credit Union, who are changing what banking can do for people, for the country, and for the planet. I don't know about you, but I have been very grateful a number of times in my life that I had insurance coverage, auto insurance, home insurance for things that have happened. We had a flood at our house not too long ago and managed all of that through a settlement of insurance, of course. I want to talk a little bit about it today because things in the insurance world are sometimes changing, and the folks that know all about that are another of our chamber champions. They are Acera Insurance. Laura Bolster is the managing director and a partner. Laura, how are you?
I'm good. Thanks, Bruce.
Nice to see you. And Luke Mills is with us as well. He is the Director of Commercial Sales and also a partner at Acera Insurance. Luke, welcome back.
Thank you, Bruce. Good to be here.
So, Laura, let's go back, literally back, to the early days of Acera, which was originally called Megson Fitzpatrick, a very familiar name to all of us. Tell us about the history of the company.
Sure, Bruce. So yeah, Megson Fitzpatrick is a Victoria insurance brokerage that was founded by two university students who hooked up together in university, Michael Megson and David Fitzpatrick, and they bought Michael Megson's dad's insurance brokerage after they graduated. And for the next 45 years, they built the organization, and from about 3 or 4 people at the time to 130 people by the time they retired about 5 years ago. And so, yeah, it's a local brokerage, an insurance brokerage where we do property and casualty insurance, and we have a life and benefits department as well. But we grew so big, and we're trying to figure out the best way to perpetuate the company, the best way for succession planning, so that some of our retiring shareholders could have a lovely retirement. And one of the ways that we figured was the best way to do it was to partner with another organization out of Calgary called Rogers Insurance. And we did that about 8 years ago. And then left Luke and I. We were the last two standing original shareholders, and we needed to kind of make our next move as well. And so Rogers Insurance partnered with another BC organization called Capri CMW, and they formed a brand new company, all of us did, called Acera Insurance. So we decided to come up with a brand new name, a brand new brand for all of the legacy organizations, and we formed Acera, and that's been for Legacy Megsons, it's been just about almost 2 full years since we've done that integration.
And it's a matter of trust as well. People trust you very much. They put their faith in what you do to help them get the best possible coverage they can. But I'm going to ask you this. I'll ask you both this question, but Laura, I'll start with you. Do people really take full advantage of the benefits of the insurance they have in place? Like, does everybody fully understand, do you think, what they can or could be doing with their policies?
I would say there's probably some clients, and it's probably, that 80-20 rule where there might be sort of 20% of the people really understand their policy and what it's covering. And then there's probably a large part of the population that doesn't truly understand insurance. Insurance is complicated, and you don't often, you pay your premiums, but until you actually need to use it, most people don't really ask all the questions that they need to ask. And that's why it's up to us as insurance brokers to sit with our clients when we can and when we have the opportunity to, and go through everything, go through their policy so that they understand what they're purchasing and what they have. But again, I think it really is only when something happens that they really pay the most attention.
Yeah. So, Luke, I'm going to go over to you for this one now. One of the things that's changed in the world of insurance and indeed across our entire planet is the impact of climate change. We've seen wildfires, we've seen atmospheric rivers, we've seen all of these things come along. That's been a huge change for insurance, hasn't it?
Yeah, it has, Bruce. As you can imagine, insurance companies are on the front lines of trying to understand what the human and financial impacts of climate change are, because they are the ones that end up paying for many of these losses. And by way of example, 2024 was the most expensive year for insurance companies for claims arising from what they refer to as catastrophic or CAT losses. So in no particular order, but sort of the top five were, the Jasper wildfires, an enormous hailstorm in Calgary, floods in Toronto, two in the Toronto area, one in Montreal, and then we had an atmospheric river here in British Columbia in October. So collectively, $8.5 billion in insurable losses were paid out so far for those claims, which is the highest amount on record. So insurance companies are preparing for this. They're trying to understand by way of better climate modeling to understand where those risks are and to refine their policies to reflect the impacts of climate change down the road.
So to go back to what Laura and I were just talking about a couple of minutes ago, how can we best structure our coverage? What sort of things have to be considered when we create our insurance packages?
Yeah, I think a few things. I mean, there's certain coverages you may have to have. For example, if you have a mortgage on your house or you have a lender for your business, there's going to be an agreement that will outline some of the things that you must have. And beyond that, I think a lot of it is comfort. It's working with your broker to understand what your risk tolerance is, like what you're okay to assume yourself. Some people purchase insurance really just for those significant losses that could be an existential threat to their home or their business. Other people have a lower risk tolerance depending on their means. So that's going to inform your coverage type. A big one that we talk about here on the Southern Island is earthquake. It is a big premium attached to it. And as those premiums grow and deductibles grow, people are having to make informed choices about whether to continue with that coverage or not, or even if it's available depending on the type of home they have and where it's located. So I think working with your broker to really assess your risk tolerance and say when it comes to your business, especially having your broker understand what it is you do so they can help you assess what those risks are and make sure to craft a policy that reflects them.
So we've had the climate disruptions, if you will. We, of course, also had the COVID-19 pandemic. That provided disruptions in the business world, and that impacts insurance as well. We're going to talk about that next. On Chamber Chats today, we are talking insurance, all kinds of insurance, with a couple of people from Acera, one of our Chamber champions. Laura Bolster and Luke Mills are with us. Laura, business insurance is something that can get quite complex. But as I mentioned, the pandemic came along. When that happened, what sort of risks were exposed for businesses?
Well, the biggest one I would say, and Luke, please, please feel free to add in. I would say the first one was the business interruption. I think that a lot of businesses assumed, because their business was interrupted, that insurance could possibly help them and that they would be able to put a claim in. But that wasn't necessarily the case for many reasons. Luke, I'll defer to you.
Yeah, thank you. I'll jump in to say, with very rare exceptions, the lion's share of businesses found themselves without coverage for business interruption during the pandemic, and that created a lot of disappointment, but also understanding. I mean, I think, Bruce, our listeners can appreciate insurance companies weren't in a position where if every business in the world simultaneously shut down, what happened, the pandemic having to close your business because of the government and health orders, et cetera, was not a trigger for business interruption coverage in 99% of the circumstances. There's still a few things being litigated. But yeah, it just wasn't designed to address that type of a global shutdown in business. So unfortunately, most people had to rely on their own reserves or on assistance that came from governments.
How do you insure yourself against liability or things like a damage to your reputation and that kind of stuff? How can that be managed, Luke?
Well, liability, there are a number of different types. If you're a professional, professional liability, general liability protect you from allegations that someone has somehow been hurt or had their property damaged, so you can get that personally. So someone alleges you damaged their house with an errant golf ball. Or if you have a business and someone suggests that they injured themselves on your premises because of something you did or didn't do, yes, that coverage is widely available, be either commercial, general liability, or personal liability. Again, when it came to the pandemic, there were some businesses that suffered some significant impacts. Think of senior living facilities. And if you go back to the early days of the pandemic, how a lot of them were really struggling with lack of staffing, and there are still some things being litigated around the responsibility of the operators of those facilities to their residents and whether insurance does or does not respond to it. In the aftermath of the pandemic, most insurance companies did clarify that the liability insurance they provide is not designed to pick up exposures from things like pandemic. That doesn't mean, though, that it is not available. So again, speak to your broker. If you did manage a business that could be material impacted, with allegations that somehow it was liable for the spread of some kind of pandemic or related illness, there can be specialized coverage available. So I really just encourage people to talk to their broker about their specific circumstances.
Because I guess you could say that there's businesses that have a certain framework. They have equipment. They have things that are used, machinery, stuff like that. Is that covered just by a basic blanket coverage policy, or do you specifically define what you're going to be insuring?
You define what you're going to be insuring. I mean, it depends on the nature of the business. Like a smaller retail operation might have a package that really bundles up their property and their liability coverage. But if you have a more extensive, perhaps a specialized manufacturing facility, you're going to want to drill into some very specific coverage. For example, if there's a lot of automation in your business, what could go wrong? What if there were some kind of a cyber attack that somehow disrupted your supply chains or your production lines? You're going to want to speak with your broker and get some specialty coverage to address those types of risks.
Yeah, because that cyber thing and AI and all that stuff's just barreling down the road toward us if it's not already here, right?
Oh yeah, it is already here. And you said those two sometimes scary letters, AI.
Yeah.
We don't know what we don't know. We don't know what's coming down the pike. And, we've seen lots of claims. I mean, pretty much if you're a business that depends on technology in any capacity, you're potentially exposed to some kind of cyber attack, be it somebody trying to pretend there's somebody they're not and part you from your hard-earned money, or it's going to be a ransomware attack, or who knows what AI and down the road quantum computing could do to businesses. So that is one that, as a business owner, keeps me and Laura up. I know I really encourage businesses, if you're thinking about where an interruption to your business is most likely to come from, you insure against fires, floods, earthquakes. But cyber is probably one of the most likely. So I strongly encourage people to talk to their broker about that, and coverage is widely available.
Maybe the insurance that's most close to home for everybody, pardon the pun on that, but Laura, is home insurance. So when somebody's kind of looking at how they're going to insure their belongings and their property and that sort of thing, what do you need to ask yourself when you do that?
Well, there's sort of two different ways to go about it. If you are renting and you are a tenant and you are wanting to buy tenants insurance, then you need to actually think about the value of all of your belongings. You need to look around and go, okay, what does everything cost? How much stuff do I have, really? And put a value to that. And that's the basis of any type of tenant's insurance. Do you need $100,000 worth of coverage? Do you need 50,000? What are all your clothes worth? What are all your furniture worth? And then that's the basis of a tenant's package. And then with that package, liability, your personal liability will also be included. And so you'll have a really good package put together for you. If you're a homeowner and you actually own a property, whether it's a condo or a townhouse or a house, then we evaluate what your house is worth to rebuild. And that's the start of your policy. So what is it going to cost to rebuild your house today in Victoria at today's rebuilding costs? And we have a way of calculating and helping you calculate and coming up with a value. And then that's the starting point of your house insurance. So if your house is going to be worth $500,000 to rebuild, then that's what the insurance policy starts at. And then what comes in that package house insurance policy is coverage for your contents automatically. So all of your belongings, your furnitures, and what have you will be a section and a part of that policy that's based on the $500,000. And then you'll also get liability, which is important as well. People sometimes forget that you need personal liability, not just your house insured, but you also need to make sure that you're protected should somebody bring an action against you. And all home insurance policies include liability as well.
So then we came to the point where you're saying, okay, I think I know what this is worth, but maybe you don't. That's where you have to go to the broker because you're the experts, right? You're going to help people determine that.
Well, we help you determine the value of your house because we have like an evaluator that helps us determine the value of your house. But we do not put ourselves out as experts in what it costs to rebuild, but we help the process. But when it comes to your personal belongings, we actually put it back on you. You need to come up with the value. You need to look around and you need to say, like, do you do you have expensive taste? Do you have medium taste? Or, do you like a good bargain? So like what is your kind of threshold? What kind of money do you spend? And when you look around your house, your apartment, what do you think? And so we would sort of help guide you. But we really need that to be put back onto the purchaser of the insurance.
Yeah, because stuff like jewelry, maybe, or artwork, people say, well, this is so valuable to me. It belonged to my grandmother or something, but that has to translate into real dollars, doesn't it?
Yeah, jewelry and fine arts, and there's there's items that will have a special limit in your policy, so you can't just assume that everything is automatically covered. So if you have a very expensive jewelry collection, you need to determine if you need to buy extra coverage because your policy maybe it only covers $5,000 of jewelry, and so if you've got $25,000 worth of jewelry and you want it all insured because you're very concerned about it, then you have to buy a separate rider, and you most likely would have to go get all of your jewelry appraised by the professional appraisal company.
I've been told it's a really good idea to take a picture of your possessions.
Yeah, it certainly helps. If you have something happen like a fire, you're obviously going to be under a lot of stress. And if all of your belongings are gone, it's going to be very challenging and emotional to try to remember everything that you had. So if you have a way of videoing or photographing all of your belongings, it's going to make it a lot easier on you to come up with your list and to start replacing things to give to the insurance company and to prove your loss.
Yeah, and there's that whole thing with strata insurance too, where maybe you're covering your contents, but the building itself is insured by the strata. So anyway, in your own living circumstance, you'll figure that stuff out. We had a brief conversation, just mentioned, of earthquake insurance, which is a real threat around here, and we want to talk about that next. We are talking insurance today on Chamber Chats with Laura Bolster and Luke Mills, who are with Acera Insurance, one of our Chamber champions. Luke, you had mentioned earthquake insurance and the whole process around that, and the rider and the anyway. It's so prevalent and it's becoming really expensive, right? Because the deductible amounts are changing. Can you explain that to us?
Yeah, so earthquake insurance is obviously really important for us in an area that is subject to seismic activity. A few weeks back, we had a little bit of a shaker. There was a shallow quake off of Sydney that I'm sure woke a lot of us up at 5:02 a.m. There is coverage available. There is obviously a cost to it, and I've seen it recently, let's say in a typical home insurance policy, depending on where you live. But it can be, a quarter of your overall premium to close to half. So it's a big number. And what really distinguishes earthquake from other perils, we call them. So let's say from fire. So you'll have a deductible in the event of a fire. On a typical home insurance policy, it might be $500, it might be $1,000, $2,500. Earthquake deductibles are expressed as a percentage. And it's not a percentage of any claim that you potentially have. It's a percentage of the limit of coverage. So if you have a building insured to 500,000, and if you had an earthquake deductible of 20%, you effectively have a $100,000 deductible. So any damage, if it's minor earthquake damage to your building and it's under $100,000, you're still on your own, because it falls within that deductible. If it's $200,000 in damage, you're going to be subject to the first 100,000, and the insurance company will pick up the other 100,000. So that's something I don't know that that's always explained well. I think people think when they see that percentage, it's a percentage of a claim that they have. But no, it's a percentage of the limit of coverage on your building. So as these deductibles creep up, 10% was standard. It's still available in some places, but it's kind of crept up to 15, 20. I've seen 25. depending on the age and the construction type of a building. It's a personal decision. I mean, unless your lender is forcing you to take the coverage, we've seen more people take a decision in light of those rising deductibles and premiums as to whether they want to continue with the coverage. But if that event does happen, I think it will be some comfort if you do carry it.
Yeah. A lot of people are buying travel insurance these days. So, Laura, when one buys travel insurance, does the destination factor into the eligibility of the insurance and the cost of it?
Not the eligibility. The thing that affects the eligibility the most is your health and your personal health position that you're in. But as far as where you travel, right now, I do not know of any restricted areas that you would not be eligible for actual travel insurance. But I'm not 100% sure if, if there's a war zone or what have you, what that would look like. But the cost does affect where you go can affect the cost. If you are traveling through the United States, then your travel insurance cost could be more than if you're just going to Europe only. And so there are some differences for sure.
Yeah, and they can also be, if I may quickly, just the reason for your travel. Like if you're going to a skydiving competition,
Right.
that to participate and not watch, that may be something that could be problematic.
Yeah.
Yeah, good point.
I just wanted to quickly talk on vehicle insurance before we wrap it up here. So there's collision, there's comprehensive, and there's third-party liability within vehicle insurance. Luke, is that right? Can you tell me what the difference is between them?
I'd love to, but there's somebody else on the call who is much better
Laura.
at this
Okay.
than I am.
Yeah.
So
Over to you.
don't
So,
worry.
collision, comprehensive, and third-party liability. Laura.
Well, I mean, collision is damage that you cause to your own vehicle by hitting something else, colliding with something else. So you have to take responsibility for your own vehicle if it's your fault and you collide with something. Comprehensive is your fire and theft and your vandalism and your windshield breakage. Sometimes that's not your fault, but you need to get your vehicle repaired. So that covers the comprehensive piece. And then there's liability. Liability if you damage somebody else's car, liability if you damage somebody else. But you have to remember we have a no-fault insurance now here in BC.
Mm-hmm.
And so the liability has changed in the last, I can't remember how long it's been now, probably about 3 or 4 years since we've had no-fault liability. And so everybody actually is responsible for themselves. So there is no more litigation that takes place when somebody's at fault in an accident. Your base ICBC policy provides you with a good benefits package for your own personal injury, even if it wasn't your fault.
These are all good things to know, and it's maybe things that you need to ask yourself more often and take it all up with your insurance broker, who hopefully is somebody at Acera. Thank you both for being here today. Laura Bolster is the managing director and a partner at Acera, and Luke Mills is the director of commercial sales, and he's also a partner. And they are both chamber champions, and we love them for that. Thank you both for being here.
Thanks for having us, Bruce.
All right. And I'm Bruce Williams, and I'll see you again for another Chamber Chat.